Welcome to Sunday school. It is Sunday, March 3rd, here in the Trader's Crib, and we are here to chart together, prepare ourselves for the week, review last week, and stay on a nice, what I'm gonna say, schedule of devotion to our trading plan and consistent level of consistency to what we are doing. So, hello and welcome everyone to this wonderful Sunday evening. I hope you all had a blessed weekend, very, very blessed weekend, and didn't stress yourselves out too much. And so, what we like to do every call is to get our mindsets right first and foremost, because that's everything into how we're breaking stuff down and analyzing and trading. Because, of course, our session will go into nightly trading and we want to have the best psychology for nightly trading. All right. So, we're going to refer to Robert Greene Daily Laws, and we are going to flip to March 3rd, where it is titled Cultivate the Craftsman Ethic. The Daily Law states, retain the craftsman spirit. Keep in mind, the work is the only thing that matters. He states the great masters, including contemporary ones, all manage to retain the craftsman spirit. What motivates them is not money, fame, or a high position, but making the perfect work of art, designing the best building, discovering some new scientific law, and mastering their craft. This helps them to not get too caught up in the ups and downs of their career. It is the work that matters. I'll end it there. I think we can all relate to that as traders. You have to do the work. And that's just a reminder. You have to do the work. It's not about the money. It can't be about the money. It has to be about, you have to find some type of further desire for this, for trading, that yes, it will help you monetarily, but your goals need to extend beyond yourself a bit. And for that, focusing on the work and the fine tuning of your trading plan until you get it right, and then the fine tuning of your discipline to your trading plan on your mindset. That's the hard work that matters for us as traders. And that's what you're going to need to focus on. So that is what Robert Greene leaves us with today, March 3rd. All right. All right. Now, moving on from there, we will look at a few fundamentals of the weekend. And first and foremost, the week, on what we can expect before we get into charting the charts. All right. So, what are we going to do? Let me change this view because it's driving me nuts. Okay. Boom. All right. So, here we are. And we are going to look at Forex Factory. Tomorrow, Monday, March 4th, we have no folders whatsoever, so we are not going to be meeting for my live day trading crew. But moving into the later days of the week, we have a full week of work ahead of us. So Tuesday, Wednesday, Thursday, and Friday all have red folders, and we will meet to trade just because we're fun and addicted traders. But we will not overtrade just because we meet. We will control impulses and position ourselves accordingly, because a lot of these red folders this week, I am not expecting to do too much crazy action to the market. Okay. So Tuesday coming in, Tuesdays can be, since we know we have Federal Powell speaking on Wednesday, Tuesday, then this week could be our run up day or run down day or whatever the hell it wants to do, in preparation for whatever we think we may be fearful of doing on Wednesday into Thursday, because it's Powell and everybody likes to hold their breath. And when I say hold their breath in relation to the chart, I mean like a doji candle or a day of really volatile swings. So we'll keep an eye out for stuff like that while we close the week with unemployment rate and non-farm employment change. So the first week, full week of the month, usually always has non-farm employment change at the end of it on that Friday. Usually those days, I don't care if it's up or down, it's going to do something exciting. Usually that's a Friday we can bet on a little more excitement, not like last Friday wasn't exciting enough, but this one may be a Friday with a lot more of a push. We'll see how it does. We'll see how volatile it may be, but non-farm employment change is something you want to keep your eyes out for as a trader tip. All right. So, we'll look at how this week plays out for us and we'll trade it accordingly one day at a time. Okay. And we're going to execute patience and keep our mindsets clear on our zen. And there is no FOMO. All right. There is no FOMO. Moving on to CNBC. I like this headline and I'll keep it here just because I'm afraid if I refresh, I'm going to lose Viking since you guys have been killing Viking lately, at least as far as paying attention to it and figuring out what type of trades we want to take on it. I appreciate the leaders in the group on Viking on that. And you guys have been great in the Telegram. And so we're looking to position this. We'll get to it on the charts. We'll have our other traders who are really eyeing this speak their perspective and give us more insight. But here is the article, and this is why they're talking about it. All right. So emerges as a strong weight loss drug player or takeover target, dun, 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 competition for Lily, for my Lily players. Yo, this may be fun and exciting. I know a few people, I can already see a few people's faces in this crib. They're like, I'm gonna let y'all have at it in a minute. Just hold on tight, okay? And then the Nasdaq surges more than 1%. S&P 500 closes above 5,100 for the first time. Woo! We are making new highs. We're doing new things in the market. It's a whole new environment, and I love to be on this journey with you all. Moving over to Benzinga, okay? I was looking at the rare. I was looking at stuff. All right, here we go. So Benzinga headlines, these 5 small cap stocks under radar. I had sent you guys this article for my Telegram group. Okay. I was looking at some of these other articles of a rare, apparently THCV. I wrote it down. We always go back to the article before my other THC lovers in house. A rare cannabinoid THCV, for those who like to also trade the cannabis industry. I was looking into more of that because I take my breaks, and so I know this was 2 days ago, but I was catching up on my news, so I was looking into it. So yeah, there's that headline. That was the only other thing I would share for this Sunday. Is there anything else anybody wants to add news-wise before we get into the charts and begin our top-down monthly analysis? Because it's the top of the month, right? Monthly analysis on the charts so we can prepare for this hot upcoming week. Anybody want to share anything? You raise your hands, please, and thank you. And if nobody has anything to share, we can just get into the charts and y'all can bring it up as we go. Whatever floats your boat, I'm down for it. All right. And welcome everyone who just joined us. Okay. So I'll let you guys come on as you please to just raise your hand. I will go into the charts and start our top-down analysis starting with the futures favorite, just to get an overall view of what the market's been doing. I am on the ESH chart for a specific reason to point out, one, this contract is expiring soon by the end of this week. We need to be shifting over if we haven't shifted over already. The 15, I was looking at the continuous, it's an extra dates, 8 and the 15. You have the 15 to it to completely expire, out to trade it. So I want you guys to note that. And it's up to you if you want to start trading the June contract. If you do, please, 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 please ensure that you change your tickers here on ES, right? You type in ES and you drop down menu here, right? And you select June, chart June, because there is a price discrepancy a bit when you are trading the June contract that we all know. So that's up to you when you want to trade it. Of course, you can start now. I'm going to stay on the March contract for this week And moving into next week, I will leave it alone and I will be playing June. Good. Good. All right. Don't forget about contract changes and playing. Yes. So you don't want to hold those contracts too long. Based on the overall expiration date outside of options and undo options if you're playing it like a stock. Okay. All right. Cool. Now back to right now. This is the future chart that we're going to start with for a monthly analysis. So as we know, we have a nice cradle here. We have a nice all-time high. Yay, it was a fun Friday, right? And this is the beginning of a new month. So this is how our monthly candles look. We'll start with, finding our support and resistance. All right. And we'll do that by using our fair value gaps. Okay. So, and we're going to keep doing this as a step. First step is to getting our charts prepared for the week. All right. This is Sunday school charting. The focus is on getting the charting right and consistent every time. Fair value gaps help a lot. All right. So when you come to the monthly, you're looking at our first fair value gap. We have nothing to the top. So I have no resistance right now. We'll get to a resistance situation with another ticker, but we have support right now. All right. And you guys know I make my lines solid when I'm on a monthly time frame, and we're going to label, right? Monthly fair value gap, close, and then the open. All right. And we're just going to acknowledge that it's there. So therefore, when we come to a lower time frame, we know where we got these levels from. So monthly fair value gap, open. All right. And we can acknowledge the one further below if you like. It's like within a doji. It's not a problem. It's just putting additional lines on the chart. All right. And we're going to be putting quite a few lines because we're in all-time highs. So we need Fibonacci today. So we're going to do quite a bit of building on charting today. So I'm not going to over chart this perspective right now. All right. So I'm going to leave it just here because I know we're going to get into stuff on the weekly. All right. So there's our monthly fair value gap, open and close. All right. On the weekly, come down to the weekly. Again, we're using the S&P 500 futures, March contract still. And this small little fair value gap that is right around the 49, it's like below our monthly fair value gap close. It's so tiny and thin. What I would recommend is putting a line kind of like halfway through it. The top and the bottom, it's so small. So what I would recommend is picking like a nice neutral psychological number. A nice neutral psychological number. So the top of it is 49.37. So you can put it at 49.40. Psychological number 49.40. You put it at the bottom of it, you're at 49.33. So you can put it at 49.30. Or you can put it in the middle at like 49.35. And that's where I was going. So 49.35 is a nice sweet spot. Okay. And this particular situation is so tiny. Okay. So what you could do to make it perfect, you can come in here, you can hit the settings, right? And you click the coordinates tab and you can make it exactly on 49.35 even. So it's perfect. Okay. Somewhere in there like that. And because I want it to be close to the bottom if it comes all the way through further because it already has wicked in it. So I love that number. And then and I'm just gonna label it because I'm not gonna put the top and the bottom. So let's come back over here to text. And I'm gonna label it weekly fair value gap support for my brain. Do what you like. Call it a tiny fair value gap, open and close. You got to look at your chart. Okay. All right. But I'm just going to leave it as like a weekly support. It's a weekly support level for me. That's good enough because I know anything below that is, price has to really come back down to get below here. In this case, I will acknowledge this weekly fair value gap open because I see how we're running up. But when we do turn around, because this is my larger fair value gap, order block, larger order block. I want to know when we're coming further down and kind of want an idea. So I just mark it there And as I zoom in, it'll get further out of the way for me, but that's 48.74. There's like a placeholder. And again, we can label it weekly fair value gap open. And it's trader's choice. And like I said, it's up to you how many lines, how many fair value gaps you want to acknowledge on each time frame. But just keeping in mind of what's significant and what's close, and what is significant is what's closest to current price, as far as like you finding the next best day trade, for instance, or the next best scalp. Even swing trade, since we're on the monthly. So monthly fair value gap open. Okay. So now, I mean, weekly fair value gap open. I said it, but go what I mean, not what I say. All right. So here we are. I'm going to leave it like that so we can come down to the daily. I'm not going to acknowledge this candle situation here, this doji, this red doji that's in here. I'm not going to acknowledge that. I'm going to leave it strictly to fair value gaps. And then I'm going to come down to the weekly. The daily. Golly, Randy, because I'm looking at the weekly, the daily, and do the same thing as acknowledging fair value gaps of support. That's all we have right now. We have support. We're going to need Fibonacci for the top. So just wait for it. We're getting there. All right. So we're going to come to the daily. We're going to acknowledge the daily fair value gaps, just fair value gaps, because that's going to give you enough lines, I promise you. Because some of your weekly and monthlies, if you're paying attention, are already coming in line with other candlestick formations. So, and bouncing off of them, right? So if we acknowledge the bottom of this daily fair value gap, and I will change the line to a dashed for daily, and we will label it the daily fair value gap close. Okay. Then, now if you want to acknowledge the open as a daily and zoom in here and get the tippy top of this, fine. I wouldn't, because a monthly is enough and it's too close and it's enough. Like, you see where price is going. Your monthly fair value gap open is in alignment with your daily fair value gap open. So we know that if price were to come around, let's just say it turned around immediately and let's just say it wanted to break down, it most likely won't, but let's just say it wanted to just break down through here and bust through here quickly, then we will be coming to fill this daily fair value gap, potentially hitting a physical gap on the daily. So one thing we want to pay attention to on the daily specifically are physical gaps. The wick going through it for me is not a gap fill. It means the gap is still present potentially. And so because my daily fair value gap closed, kind of opening close to the opening of this gap in this doji blue candle here, I'm going to make a line at the body of this blue doji candle, which is on February 21st, Wednesday. All right. And that level is 49.96. And that's where I'm going to acknowledge the gap, because that's the gap between the candle on February 21st and the candle on February 22nd. Okay. All right. So, and I will label that as well. We want to label, because you're going to come down to the 2 hour next. So we're going to label this daily, just gap, not a fair value gap, just a physical gap. If you want to put Globex gap or whatever, GG, whatever little sim, whatever you want, whatever feels your fancy, go for that. All right. Okay. And in this gap, we have another physical daily gap, but because my monthly and my weekly support line is within it and kind of sectioning it off, I don't need to add any more lines because I want to keep a nice clean chart. So when I zoom out a little bit and look at the daily, this is what I have. I have some nice levels of support here that can sustain for a couple of days and weeks as price begins to turn around, if and when it chooses to do so. Of course, we'll be making adjustments as price continues to make its way up. All right. Now we're going to come down to the 2 hour. Okay. And this is where we're going to get into where our next trade is if price is going up. So from before I get there, let's acknowledge candlesticks. Let's acknowledge some significant candlestick patterns that we have that are confirming bullish sentiments. All right. And in this case, we have what can kind of go for a little bit of a W. So I'm going to start drawing on a chart here, and just bear with me with trend lines. So we kind of had a W here across the daily, right? and price gapped up and broke out and closed above its neckline. Yay, made a new high. Then price chopped around a little bit, and within its chop, it made like a hook, a J hook to be exact. There's the letter J. Yay. All right. So with that, this is also another bullish pattern. Price should, but it can do what it wants. I'm not the one in control of the market. Break out from this J and continue up another candle from here on the daily. That's what we would expect it to do looking at this pattern. For my cup and handle lovers, we can look at this as a large cup and handle. Let me draw it over. It'll be like more like a mug, like a beer glass, maybe for that nice tall, or where my beer drinkers at. There you go. So there's the cup and handle. All right. We're gonna identify a few different candlestick patterns that are confirming that we could potentially go up. All right. Does that work for everybody? We still all here together. I haven't lost anybody. Any questions? All right. And clean all these lines off, the trend lines and stuff. Give me a second. And then we can get into Fibonacci on a 2-hour, because at this point, I only want Fibonacci coming lower. So from the 2-hour, I made a discovery. So where are all my trading geeks at? Here we go. For my trading geeks, new discovery. I've been teaching y'all Fibonacci because, everything's been running up. So I've been playing with Fibonacci a lot more. And then I just saw it on the chart Friday. I saw it and I said, because a lot of y'all helped put me onto it too. Y'all been drawing fibs tighter and finding different levels and stuff like that. But something said, I've been doing it like the whole. So what I've been previously teaching, let's recap what we know. As I was saying, going from block to block, and like this block is bigger, but block to block, swing high to swing low. It works. There's nothing wrong with that. We start with point A here at this lower block, and we come to the top of it, point B, and we have our Fibonacci. Yay, price breaks out. We know where price is going, 5,200 area. Okay, great. But we see that on Friday it gets stopped. Like we didn't make it all the way up there. Of course it couldn't. That's like really far for ES to go that far. That fast. In one day on a Friday, especially after it already moved a lot. So it was like, well, how far up is it gonna go? Right? It was that question. So you're like, well, this fit works, but okay, now I'm guessing I'm in between. So I'm like, how do we make this better? So here we go. We take the block that it just broke out of. So for instance, now we're zooming in tight here. The price broke out. So that means on Friday at 10 a.m. for my conservative traders, this is your breakout signal. All right. You're like, okay, what do I do? How high is it going? We closed above the previous all-time high. Where are we going? All right. You immediately have to go, I got to draw a fib across the consolidation. So what that means is you're finding the highest point in the consolidation and the lowest point within the consolidation. So high, low. Now, look where price broke up to. And look how pretty it is. And now that's a much better prediction on where you could potentially take price at. And again, use psychological numbers for your take profit in this case, so you don't have to worry about not getting filled for a couple cents. Okay. Just telling y'all. All right. And don't overshoot yourself. Come down a little bit because you see where it turned around. So it didn't stay up here long. So, but it hit this fib. I can draw that again. Yes, ma'am. All right, here we go. So we have a large order block. Let's first identify the order block. The order block is here. Are we all on the same page with that? That we needed price to break above this previous high at 5123, 5124 area in order for us to pick a direction. It was going to break down, it was going to break up. We were waiting. in this block, we want to look for the highest and lowest point. Let's zoom in more. Okay. Hold on, let me get a finesse going. Within this block, because I know the color's about to come with Fibonacci, so I want a nice visual. All right, so within this block now, we're going to focus here. We want the highest and the lowest. The highest and the lowest. Okay, I don't really care which way you draw the fib. In this case, you have no choice but to kind of draw it down. So this will be your high to low, and I know it's kind of backwards in so many cases, depending on what book you read. It tells you to follow the trend, so you would probably do something like here to here. But if you put projection lines like I have taught you guys to do, you have an inverse flip type of fib that can help you either way. Just get your A and B point correct. All right. And so highest to lowest point, price is going to break up because price is going to break down. We have projection levels. So that's why I want you guys to focus on that. And you see, I'll remove the block now. That price came right up to the next fib, like the next fib. You didn't have to like gas halfway through or any of that shenanigans because we didn't draw it too big. We took it closer. And because we did that, we now have a more immediate fib level we can trade off of. And if you make it perfect, you know, if you make it perfect, it gets more right up there. If you do the bodies, if you go body to body, it's going to be more like this. Okay. So you're going to have to keep using the fib, you guys. Keep tweaking it between the wicks and stuff. I find the highest and the lowest to work like this. It gives you the best area to go off of. Again, 5150, 5149. You wouldn't want a whole number 5150 because price levels like to come a little bit shy. So we would come down 5145. You would have been fine, right? Or even 5140. You would have been fine, right? You come within 10, leave that $10 on the line, knowing that we're going to retrace back down at least to the all-time high, the previous all-time high before running back up. Can we all agree that's a nice, I think that's a great fit. So we just have to, like I said, just take your patience with it. But I like it on a 2-hour for the futures traders or anybody trading, day trading, 2-hour, please. All right. If you're swing trading, come out a little bit. This is depending on the all-time high, yes, because point A is at the all-time high and point B is the lowest consolidation before price decided to break up and out. Now, for my aggressive traders, for my conservative traders, this is your breakout candle signal, the 5122. For my aggressive traders, for those who can see it, because I took it, this candle should have been enough of a signal. This whole little pattern right here, once this formed, should have been enough to know that prices was going to potentially come up because you had wick left up here into this. So let me take Fibonacci away. Let's break this down for my candlestick fellow gurus in the house. We're going to, this candle broke out of this smaller consolidation right here. It broke out strong. Then when price retraced back down, it couldn't withhold or break past the lower level, so it stayed as a tweezer top. I wasn't worried about the tweezer top. It's a fake because it didn't break down this bottom. This was going to be your candle that's going to confirm that because this candle was bullish, and then the next candle was bullish, and the next candle left for this wick all the way up here. That was your confirmed signal that price was definitely not coming down. So you had the rejection, so you had to wait. What was my next candle going to do? This one didn't give you as much information that you really needed, but you didn't have a confirmation to the downside because you didn't have a breakdown here, so you waited. Then this is a 2-hour wait, so right, we're on a 2-hour time frame. Then you're seeing this doji happen, prices running up. You're like, it's breaking right now, and then it stops you short in the middle. If I put a line, it's in the middle of this candle right here. because it's in the middle of this candle, this area of this candle has liquidity in it. That's a hidden kid in the fair value gap, right? Because it needs to reach the top of the candle body to fill the fair value gap. So this was our confirmation cue. Price left it because our fair value gap kind of will be distinguished from this wick. It's this room from here, from this wick to the top of the body, from the wick here on this doji to the top of the body because it's a tweezer top. So we left a wick, we left a kid in the fair value gap. Price came back down and you almost got scared, but you didn't break the bottom, so you shouldn't have moved. And price eventually made its way all the way, made you look again, got so close, but never filled. So you shouldn't have moved unless you got a break below the previous low. We did not. You hold, and eventually price came and picked up all them damn children from the daycare in this small hidden liquidity gap that's in there. All right. And then we broke out. And then when this happened, I took profit here because I saw this whole run up happen. And then when we confirmed breakout, now where are we going? Draw the fib. Da, 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 da. Be quick about it and take profit up another $10, $20. Get out of Dodge. Have a great day. Don't care what the market does after that. Just leave it alone. All right. And then let it settle. And we come back to live the trade another day. Right. We like that. Great, great, great trading plan. It was a great Friday. So that's what we did. All right. So what are we charting next? That's ES. Of course, I know we want SPY. So I can pull this against SPY and we can chart SPY together to see the same thing. And then from there, I'll let you guys voluntarily tell what, and I did the same thing here, that Fibonacci. So what you could do for SPY, of course, you can do another top-down analysis, take it all the way through, all right? But for my day, take it all the way through, look through everything. But for my day traders, right, you can come right down to 2 hour, clear your chart, come right down to 2 hour, take the high and low in this gap, and get most of your lines done with the fib. Shortcut charting, okay? Fib takes a lot of charting out time away from going from each time frame, right? And then you have these projection levels that you can still use as you zoom out, back out to the larger time frame. Look at that. So this is what the daily looks like with the 2 hour Fibonacci that I drew on SPY. And so we know that we want to hold SPY a little longer than what we scalp ES, okay? Because you need time in the contract, at least a day or two, in order for it to make the money you would prefer to see. But I'm not saying you can't make money on a day trade. Like I've gone in and out of SPY quick in a day and made a couple $100, $200 easy. But if you're trying to hold it and swing it, I see your hand, Kim, just give me a second. If you're trying to swing it, these larger time frame is going to help you out a lot. Go ahead,
I
Kim.
was going to say, if you're a swing trader, don't you draw the fib on the daily and not the 2 hour?
So you can do it's because I know how I manage SPY. Okay. So I manage SPY day to day. I know that if it's not going in my favor, I'm not going to hold it. You have a different psychology. So even if I were to draw this over the daily, because a lot of times, if you pay close enough attention, when I'm drawing it over the 2 hour, it'd be the 2 hour over multiple days. Check it. So when I come to here, right?
Yeah, I noticed that. I
Right.
noticed that. And I
So
never,
there,
but
because
the
I'm
other thing is, I never saw anyone, you kind of did it from an all-time high to the low that it hit before it ran up. Correct?
say that one more time.
On the 2 hour, you drew it from its previous all-time high
Uh-huh.
to the low that it hit.
Yep. Which was basically the fair value gap it bounced off of right here.
Now, normally you would go from, if it's Sunday, I would have gone from the low
Down
to that
here.
high to no to the current high, and I don't understand why you went from the previous
Because
to the
the current high is not a, what's the best way to explain it? Like stuck on words. You know, you okay, let me all right. If you draw, let me see if I do it, maybe I can better explain why it's not best. So if you do this same low, so you're saying the same low I took, but you're coming up to this high.
well, actually, it would have been the low way
This
over.
one?
Yeah, that one.
Okay. All right. Based on the candlestick pattern, this is a 2 hour though.
Oh, okay. I
You
can't
want to
see
do it
what
over,
we're on our
you want to do
phone.
it on a daily?
It doesn't matter because it should be pretty similar.
It is. So okay, so here's the thing. When you do it this way to the current high, you yes, Fibonacci is saying, okay, price is gonna make it up to 5817. I got that. And price can retrace and bounce off of these levels because it looks like it's lining up with the fair value gaps. I got that. But you want, when you think of the ATR, if you put pieces together, you can see how it doesn't fit well. So the next Fibonacci level is $4. And depending on how SPY trades for the day, it may not do the whole $4 move, even if its ATR is around that. We know that. So you want sometimes a shorter target, but if you're going to swing it, you can swing it. But I don't think it counts best for the retracements as well,
Okay.
because you're leaving out. God, let me try to, because I drew it this way. I want to come up with a better explanation because there's a word that I could like see in my book that I am like, and it's not coming to me. And I want to explain that better because you really want a already formed like top and bottom. You want like a support and resistance that was previous because you're trying to get what can go beyond. And it's only in if it wasn't a all-time high situation, I would say you're more right, a little bit more right in how you can get away with drawing that because you at least have data to the left that you can help count on to help you better align your Fibonacci and your take profit targets, right? But when you don't have anything to the left, it's not wise to go off the current high because you don't know if that current high is going to sustain. It can just fall because it's a current one. It's like forming now.
Okay.
So my thing is if you take previous data, the most recent support and resistance that is already formed in an all-time high situation, you can better predict where you're going to get those short-term highs and price may stall and fizzle out so you won't hold a position too long. That's why I'm trying to just control holding too long with the expectation because I've done that way before and I got burned when I did that shit. Versus you see the way I drew it this, if you would have did this on Friday after this, like, because this happened, this was Thursday. I mean, Tuesday, this is by Tuesday. So Wednesday, so say by Thursday, you draw this fib because you see prices coming up. All right. You would have been able to ride SPY the next couple of days because you would have had a nice target that would have got you out on Friday at 512 versus doing it the other way. You would have overshot because you would have did that on Friday and it's currently moving. You got to think in the moment, what can you do to capture an all-time high?
Okay. So Friday I did right, but I got out too soon because it did do, and I think I was looking at either the 15-minute or something, and it started dropping, and I was like, okay, it might turn around. Let me get out. I get out with profit, but I still got out way too soon.
Understood. And that's what I'm trying to help clarify how to not get out too soon in a current run up. And when you're currently running up, if it was in the moment Friday, you couldn't use this candle because it's not there yet. So so what would you use? And when you know price is coming up, okay, all you got is this high and this low. That's all you got in the moment.
Right. I guess if we were doing a back test, I probably would have saw it better when you drew the fib versus
Right, there you go.
right.
Facts. Exactly. Because you're gonna need to do that. Because I really am taking the last like 3 days. I'm taking what? The 23rd, the 26th. So Friday the 23rd, Monday the 26th, Tuesday the 27th, and Tuesday the 27th to draw that fib. Like it's really just this downward pull. But I wouldn't have known to draw it until I got to Thursday. I know that just from looking at it because I just because you needed to
And I
me
probably
that
drew it
run up.
before then. I probably drew it that previous Sunday and didn't redraw it.
Got okay. I
It's
mean,
probably,
that's fine, but
and that looks like a cradle, and then
it
it broke
does.
out from
When I
the
would,
cradle.
this would have been this signal right here, and it didn't come till Thursday morning. So Thursday would have been your confirmation for a nice fib to figure out how you can run a breakout if it was going to happen after it reached the all-time high. Because I wrote it up to the all-time high, and then I was guessing on how to run it up here, and I did like halfway, like I did last time, and it worked. It's fine, but I don't like that. It didn't feel good to me. And all of a sudden, when I was back testing Friday, I saw it and I was like, shit, I could have drew it. Okay. And once I start to get my run up confirmation with the wicks and all that, if I come in here and I gotta program my brain though to remember, draw the fib when you see the signal and the kids and the fair value gap on the upside, draw the fib, like draw it to where you're trying to predict the breakout because and this is only an all-time high situation. I hope I didn't lose y'all with all that. But if I did, please ask a question outside of Kim. That was hard to explain. But I appreciate that challenge. I needed that, Kim. So thank you. Are we good on that? Is that making any sense? Everybody else good? Somebody please tell me something. At least say yes, Randy, in chat. On Fibonacci. All right, and then we can move on. Perfect. So now let's go on to whatever tickets you guys want to start. I can start with mine, of course. We can check the Dow and the NASDAQ before I do that, though, to see how they did. Okay, Meta, that's fine. I'll put that on the list. Any others we want to make sure we get through today? Just drop them in the chat. All right, so NASDAQ, here's the NASDAQ from the monthly. We'll do a monthly analysis. Here's the NASDAQ continuous. All right, Esther, we got Viking, HD, and Cat. All right, keep sending them in, guys. I'm getting them down. So we have the NASDAQ that has obviously did the same similar pattern of breakout as the ES from the monthly. And so we can expect, a potential, more run up, especially after this little order block on the weekly. I love the way that looks. So from the monthly view, I'll take this fair value gap. Let's mark it up right. But I don't really trade it. I just want to mark a few things just to get a good visual of where consolidation and breakout is and go from there. So we got a nice consolidation and breakout. I took the monthly and came all the way down to the daily. And it looks great as far as a push up and a run up and where it should continue because we don't have much to come down to. Like we will just be bouncing off of it potentially. This is a nice strong block of consolidation. And then the Dow has a similar pattern. This is the monthly Dow. It's been running up as well. Weekly view, a little bit more stagnant, but it did make a nice level here on the weekly with the pattern. And then the fair value gap is lower below. So, and then when we get to the daily, it's like melting its way up there. It's not at an all-time high Friday, but it is melting its way back up there after bouncing off of this gap that is below here is on the daily gap here. All right. Duolingo, y'all look funny. XOXL and Amazon and Duolingo. All right. Sounds like a fun list. All right. I'll start with y'all's and go from there. So we'll start with Meta. I think I have Meta on my crib watch list. The crib, y'all make my watch list nice and thick over here. All right. So let's do top down on Meta. So, because I haven't looked at Meta in a while. Meta looks wow. Talk about a V. I mean, damn, but we know just all right, Meta, let's go. So we're gonna go with this is the beginning of March. So because this is the beginning of March candle here, we want to not, and I want to make sure I didn't make that mistake on the charting with ES. I'll go back and check. But but anyway, this is the current March candle. So we care more about the close of this fair value gap than the open. All right, when we're marking the fair value gaps on the monthly. Because this is the current month. So it will shrink down this fair value gap this month as it retraces back right into it. So it's at an all-time high. We have to be aware of the fact that because it's an all-time high and this is the current month candle and this is the current fair value gap it's trying to make, that upon it making a bottom wick to this candle, because we don't know how big, small, whatever this candle is going to be, that this could shrink the size of this monthly fair value gap. So we care about the close of it more than anything else. All right. So monthly fair value gap close. Then from here, because this is such a big one, I'm going to come down to the weekly. I'm going to leave everything else. And I'm going to come down to the weekly. And I'm going to find my weekly fair value gaps. And we're at all-time high. So it will be support only. And we can acknowledge this is a pretty significant space here. So I'm going to acknowledge the difference between the close of the weekly and the close on the daily in this case. So this is, weekly and monthly differentiation, sorry. Weekly fair value gap close. Because my monthly time frame is a stronger time frame, and because it's above the weekly, I want to acknowledge it because I would most likely going to get a stronger bounce at 406 than I will at 396 as price comes down, if and when it chooses to come down. All right. I didn't mark this. Oh, okay. This is weekly. Okay, got it. So weekly. So we'll top of this weekly fair value gap open. Okay. So we'll pause here and take a look, and we'll see how our candlesticks currently are not leaving any wicks in this lower weekly fair value gap. So we can't apply our kids to the fair value gap theory just yet. We don't know if one of the next few candles, we don't know how it wants to keep chopping here. Right now, it looks like a breakout until it doesn't. The next candle will come down and it not be a breakout anymore. I'm just saying, I've been tricked out by this first breakout candle. It's the next one that really gives you that continuation. If it does something ridiculous, it may not be the breakout that we need, but this looks good for the potential. And it most likely should do it because it is holding that J pattern, right? So I'm expecting Meta to continue up. So from here, we'll drop down to the daily and we'll figure out how it will retrace from the daily. So from here, I want current price and I want my closest to current price is what I want. And I want my fair value gaps. Now, in this case, the opening of this fair value gap at 482, fine, but the close of it is in alignment with the Globex gap. So this bottom close line that I'm going to acknowledge with the wick of this candle, not the body, because these gaps don't fill, as you can already see, kind of not filling. And I will make this line purple to acknowledge it's a Globex gap fill line. And so we want to ensure that price is coming back around, dipping back into this area before we even acknowledge or think we can trade this gap down. Right now, what price has done is it has chopped around, gapped a little bit, and then broken up to the upside. All good signals that price will continue up. We could acknowledge things further, but further down, like you can acknowledge that this is a daily gap. That's trader's choice. My weekly line is in alignment. And for me, until price really turns around, I don't care to really figure out exactly where I would need to take profit on a trade if I was thinking price was coming down until I see some better candlestick patterns. So right now, I will focus on the top side and I will be trying to figure out how to draw the best Fibonacci. So in this case, let's see what the 2-hour has on this order block. Okay, so in this case, this order block seems to be trailing up more. So in ES, it was the flag that so sometimes you get flags that go like straight sideways, and you got flags that like dip down a little bit and then go up. It was one of those dip down ones, right? And then in this case, when you're doing like a pennant up, it's doing one of those pennant like squeeze and then breakout. I'll show you how it's a squeeze. I know I'm doing crazy stuff with my hand. Y'all like, Randy, what are you doing? This is the squeeze here. It will be like here to here, right? Because this is like the trend. I know it's bounced off of it. And then, but I can see it. Just give me a second. And then here to here, right? There you go. So it's one of those flags, all right, from the 2-hour. In this case, we are going to pull the fib a little bit different because of the trend. And so we do follow the trend in any case. You just kind of have no choice. It's just if you, again, have your lines drawn right, it works out no matter what side it breaks out. So in this case, these two candlesticks are about equal, so I don't care which wick you pick. You can pick the furthest one. And then it doesn't, because they're about the same. And then I would go up to, I don't like wicks. Wicks are just, I don't like wicks as breakouts. Like the breakout is the true candle body. So I would do that. And for meta, I know how meta moves. So meta, you need some time for it to get to the next level. This is where you got to play with it. Yeah, either way, you was going to come up short on this one. So between this high and this high. And it's only because price came down enough again, right? And then you have previous data when the breakout happened. So it's kind of like, depending on how you would have charted this one, this will be going for more like a day, like, intraday trade from the 2 hours, kind of where I start. But let's come out to the daily and see how it looks. So we have this large gap up. Price is really trolling, trading up. And on daily, you do have a few levels that is continue up to. So I would just buy enough time to trade meta to its 514 target. It has a nice breakout patterns. This is where you're going to rely more on the breakout pattern itself. And then manage day by day to see how the candles are forming, how the pullbacks, look at new fair value gaps being formed. So if it does fall back down, you are able to hold through the pullback, like this 2-hour fair value gap right here. I would acknowledge that as well. And do my dotted lines. This 2-hour fair value gap to the bottom of it, because that's going to help you recognize where price is going to retrace back down to. And then this one again is in alignment with like a physical gap. So however you want to mark it, I'm just going to mark the bottom of this candle body because of the gap. Because I don't even know if price is going to come down all the way down here because the Fibonacci is cutting through it. My previous all-time high is also here, and price most likely will only come down enough to the all-time high before running back up. But you need to confirm that it's even trying to do a pullback by waiting for the next few candles to form and draw the pullback. So that is the move I say. And if you wait for the pullback, you can get a better entry. You can get a better contract entry at like 494 instead of taking it up here at 502. And remember, every dollar matters with that delta. All right. You have a question, Jean?
Oh, my friend, she does a Zoom group.
Okay, cool. So that's meta. Let's get down to any other questions with meta. All right. We'll go to Viking, y'all new fan favorite. I can't wait to hear what y'all have to say. All right, let's do this. Viking has this crazy. This is what Viking looks like. This is what the hype is about. This. All right. So Viking looks crazy. There's nothing I'm gonna chart from the monthly time frame on this because it's too high. So I'm gonna skip this. It's just nice to look at when it's this high. So I'm coming to the weekly because I want something better. Still not giving me anything great because all this happened in a very short amount of time. So we're gonna come to the daily, and this may be a situation where we're gonna start with the daily because we just have too much run up at too short of time to get anything of value information. So in this case, we're gonna come to the daily on Viking because it's got too much going on, and I knew there would be a gap here. So I almost just want to draw a fib across this thing, but we're gonna take a moment and pause at candlestick. So when price runs up and you only got like a little bit of data up here in the new high, because it's probably not going to fall back down like talking about it when it pops up like this. You can, of course, we're going to mark that where that happens as support, of course, on the daily. And we're going to kind of ignore fair value gaps in the situation. We have no choice but to. So we'll focus on this big gap. Of course, you can hit the close just by acknowledging it. That's fine. All right. At the bottom here at 38 with the opening at 69.72 area. These candlesticks up here above 69, we have a little bit of a bullish, potentially bearish, because sometimes colors can trick us up. Harami here, okay? We definitely have the baby inside of the mommy candle, all right? In this case, this usually, if this is by definition and colors apply, this is a textbook bullish Harami. This is a textbook bullish Harami. So our next Viking candle on the daily should be green, bullish, or whatever color you chose to make your bullish candles on your chart. All right. It's the textbook. All right. So we're going to see how price may want to break up from here, especially that we know we have a gap to support it. Go ahead, Kim.
So
Oh, did I hit mute or I was trying to lower your hand. I clicked the wrong button. Sorry.
my question is the fact that it's right beside an evening star.
So your next candle is gonna confirm it. This is where I think the chart is intended trying to confuse people to when it does things like this. You're like, okay, well, I see the evening star and I see the Harami. That's why you have to wait for another candle because you're going to, because what this next candle can do, it could be drawn, it could be a few things. It can come back down here enough to bounce off of this and then still come up here. And then you have this type of situation. So then what do you do with that? So then like that doesn't necessarily say that price is going to break out because then we can come the next day and we can do that. I don't know how many days Viking want to stall before it break out again. But you got to kind of envision all scenarios. So
okay.
I see both. Which one is going to do? Time will tell. You come to the 2 hour, we may be able to get a little bit of more information on a potential direction. So we have a fair value gap that's trying to finish being filled. But if we fill it, right, once we fill it, make it red. Okay, once we fill it at 91, that doesn't necessarily mean we're going to break out past 99, the previous high. This can, for my advanced traders, you should also be able to see a potential M here or something like that, right? It doesn't have to be, so we have to wait. You can take it to the fair value gap and take a small scalp, but then you would need to exercise some patience to weigh what it wants to do in this area as far as giving you a breakout signal to the top or giving you a reversal and making M to test the gap that it made. I don't know if it wants to. Nobody knows. So that's what you're really waiting on. And this pattern doesn't confirm squat on that. And just letting you know. It doesn't confirm up or down right now. It confirms drawing the decision. If that makes sense. But I understand why Esther bought a call, because it does look like it's healthy in this gap with support, and it's in headline news, and it's weight loss competition and all. There's a lot of stuff supporting a move to the upside right now outside of just a chart. So it's not a bad risk, but we know that we can bounce off the gap as far as just collecting more buyers before we can break out to the top, right? So that's what we're gonna wait for and be patient. And you bought enough time, right, Esther?
Yeah, actually, I bought an April 19th call. I actually feel like this because we're trading on rumor, right? Like this is the quintessential what the market does just to mess with us, right? Like it gives us these tickers we never heard of before that pop. What is interesting though is that the scuttlebutt now, which is why this is going to do this little dance, and I think we're pretty safe at 69 and 70 being support and not really seeing that be broken anytime soon, is now everybody's starting to talk about Viking as a takeover target. So if you're GlaxoSmithKline or Abbott or somebody like that with a lot of money and you don't have a drug in development for obesity, you're going to want to buy a company like Viking, right? Because they're still affordable. They're not $800 a share. So
Right.
and somebody just raised the price target on Lilly to $1,000 from 800. Yeah. So this is a pretty competitive market. And I think that as long as it's in the news, we're going to see a lot of bounce, and that's going to be fun as day traders. So my intention is to be like in and out, in and out, in and out. And then one day when it pulls back, just back up the truck and buy shares. Because I do think that one day, very soon, we're going to hear somebody say $9,500 a share. We're going to buy a company.
Mm-hmm.
If they're smart, they buy it cheap.
Mm-hmm.
But we shall see.
Yes.
But yeah, I think right now for me, my target, when I looked at this on Friday at the close of the day, I thought, you know what, if we can go back up to even the gap that was filled with the big red candle, even if we could go back up to that 90, I think that that's a good target. Yes, I have time to hold it further than that. I want to see where we open tomorrow and what the story looks like tomorrow. It's going to be a volatile week with a lot of economic data. So
There is. I expected some swings, but I expected to also have some hold breath because of Powell stuck in the middle of the week.
right. I agree. I'd rather get it in that. You know me. I'd rather take my money and run.
Yeah, Powell be, man. Everybody just be, I don't know. It's just frustrating on Powell days sometimes to get like a good move, you know.
Gotta find
But
a rebel. You gotta find a
yeah,
rebel.
you gotta find
It
a
doesn't really
rebel.
care, right? That's the way to
You
do
gotta
it.
find a rebel
We
that
shall
don't care
see.
about Powell.
That's it.
Perfect. Now this looks great. We'll see what it does. I mean, as far as, trying to draw fibs in situations like this can be tricky.
Yeah, I
It can
agree.
just be tricky. You got to kind of wait a little bit for some more data to get it right. But take your bet on one side. That's not a problem. I don't think there's a problem really for what you did. I can see
I'll
it.
make you laugh. It was 345 and I pulled up and I looked at the daily chart and I'm like, looks like a harami pattern.
Yeah, it
I was like, yeah, so excited right now that I actually know what I'm looking at. So I just thought, you know what, let's, even if I didn't set a target, I'd exit because it was just like, by the time I got filled, it was like 357. I'm not going to get filled.
I can't believe
So
you did
I want
that.
to, yeah, me neither. I don't like to trade at that hour. So when I had worked all day and I came home, because I had already gotten filled on a call I got in the day before, and I made $110 when I thought I was losing money. So it was great. I was like, okay, let's try Viking again. See if we can make magic, lightning strike twice. So let's see. Oh,
Let's
our
see.
other home favorite, Home Depot.
Home Depot. Let's get it. All right. So top down analysis, we'll get it done. We'll start with our fair value gaps. This is a current one. So we're going to work about the bottom of this one. Same thing. All right. This is our monthly. If I can spell monthly right, Randy. Monthly fair value gap close. All right. So that's where I know how far price can retrace down to just this month because we're in the current month candle. Right? So then if I come to the week, no, I want something else. I want the high. I want the top of this candle because we're in it, baby. We in it. Oh my God. I can't wait to realize my profits on Home Depot. Oh Oh yeah, because I got April call. I'm just gonna ride this month out because it should. Like I feel the retracement, but we could just come on up there. And if I have to make a few adjustments within the month, I may. But oh my God, everything about this from this perspective with previous data in the back, we don't need any all Fibonacci right now. We're not in the all-time high like HD. We got data. So because we have this monthly data and because we're in a nice cradle and price is broken out of that cradle and is closed above the neckline of this candle, and we are now moving up into and have closed into the wick of this candle, we are going for the gold. We know from this perspective, we will get a bounce at the bottom of this evening star pattern from a monthly perspective. So that can be kind of like your fair value gap. Open will be the 401, close the 416 as that next one that's trying to get to that it'll bounce. Okay, we know this because price does that as soon as it hits this. So 402, 400 area will be my target. That's exactly the strike that I have. See how excited I am. So I think Home Depot is going to do the damn thing. This is the monthly chart. All right. So this is the monthly. I'll call it a monthly. What do I want to call this? You can use a candlestick pattern. Like I have called these previously, like monthly evening star, the evening star, that the middle candle that makes it the evening star. Ooh, excuse me. We can do that. Okay. And then of course this is the high here, or not the all-time high, but the candle body high, top candle high, whatever. Monthly though. All right. My chart's right. Candle body. I don't know, it's a high because it's red. All right, and then we come down to the weekly. Look at that big old juicy gaps here. So with the weekly, this is why I'm being careful. I'll probably take profit sometime next week. Because we have this weekly right at 387. And if you pay close enough attention in here as we further dissect the top, we have a gap here. We have a physical gap that's showing itself on the weekly, right? We have a physical gap showing us on the weekly. So this will be a weekly gap close. And because it's weekly, I know we're going to bounce when we hit the enter to it. And the entry is 387.28. So I was thinking to take profit there and then readjust depending on the retracement to finish up to 402. Okay, because we have to build up a little momentum to get through that gap. And so that will be like 1 week to push to it, another week to build up, another week to put you aim app, and a Home Depot can stall. So we'll see if it'll be weaker days and how it wants to play it out. But I'll give it time, is all I'm saying. Just give it time, give it time, give it time. So I will label this red line like weekly. I'm going to name it weekly gap opening, actually. It's that physical gap opening. All right. And then we come down. Nope. Come back to weekly. Anything down here I want to chart? This tiny weekly fair value gap. So next week's candle is gonna form. So this is done. So we could be able to just go in here and do and square it off, I would say. It's like $2 in there. It's up to you how you want to square it off, but that's the weekly. Open and close. All right. I'm almost typing too fast today. Okay. And so here we are for the weekly. And then we can come to the daily. And we got nice support and resistance, right? Support or resistance areas. And we see prices moving up nicely. We're going to count candle highs. We're going to pay attention to our candlestick patterns now. And we see we got, looks like 1, 2, 3, 4, 5, 6, 7. Give me 8 new price lines. Come on with another bullish candle tomorrow. Let me get my money and be out of here. Let's make it an easy Monday. You ain't got no folder juju because you got all this data in the rest of the week. Give me my money. Let me be gone. Then do the pullback. Let me get back in around here in this low fair value gap and then write it up. Okay, I'm done. That's my trade. But that's what I'm thinking as we come back up here. But Yeah, it looks great. So we do have that kind of confluence that the next candle could be a actual bullish candle tomorrow. We'll see if that actually happens for us. From the daily perspective, the only fair value gap I care about is this one of support at the moment. Everything else is supported by weekly and monthlies. So I'll come in here at 378 and mark the opening of this daily fair value gap here. Well, it does have a small little physical gap in it too, so keep that in mind. However you want to mark that is going to be trader's choice. Because I'm gonna see what happens on a 2-hour daily fair value gap open and the close. We can take the close of it. It won't be too bad. It won't be too crowded. All right. And then we drop down to the 2-hour. If you were doing some scalping or trying to understand what was going on with this gap on the 2 hours, where I would acknowledge this level, I would take like my dotted line and I would acknowledge that this is a gap close. And I would say 2-hour gap close, right? So boom, and that'll be good enough for me. I could mark the opening of it if you want, you seeing this line here, you're seeing how the fair value gap open is above it. So if you acknowledge it and then come back out to the daily, and you're right in par with that daily gap. So I would just use like smaller lines if you're gonna do it, because so it won't just be too blurry, too much to look at. And then if you come to the 2-hour and come closer to current price, you do see you have a small 2-hour fair value gap right here. And if you're like, oh my God, why is price pulling back on your position at any moment? Because I know I'm currently in it, so I want to know. So I'm going ahead and set an alert at the top of this fair value gap because it's coming down too strong. I want to get the hell out of Dodge. So I'm going to acknowledge this 2-hour fair value gap, which is right on top of this, like smaller, but if you combine it with both of these, more like a little larger order block. So I can suspect price to kind of pull back and bounce there as it in its intraday movement, as it's trying to come up, but it just depends on how it wants to move for that day. But that would be it. Let me come back to the daily here. I didn't go to the daily back. Come back and get the daily high in this other gap. Okay, so from the daily at the top, sorry guys, there's a lot of stuff on Home Depot. You have this gap. There's like a lot of stuff to read in here that you don't want to miss, because you got these gap and then you have like all these wicks, and these wicks, man, from a daily perspective, man, they can really matter until price has the power to just blow through all of them and take them all out. So the close of the daily gap is up here, which is slightly below the weekly. So what that could do for your day trade is cause you to have to get out early a little bit. So I would acknowledge this one as well. I would acknowledge this high on the daily. 386, and that discrepancy, because that discrepancy makes a difference for how you're setting your take profit orders when it comes to these. And so acknowledging is not going to hurt. You just want to take it in phases, right? And acknowledging is not going to hurt, because these wicks are going to matter as price tries to come up through here and close off this gap. So if we get enough momentum, this is where you're going to pay attention to, like, the news and how it's really pushing the market and things like that. And that's going to help you better know you can just move through, or you're going to get some bounce. And you may even get a bounce, but it may just be like a 15-minute bounce. Maybe the bounce may be not as strong as you may think it's going to be, because the momentum is behind it and whatever the case may be. But acknowledging that it's there so you can understand why it pulls back when it does, it is helpful as you're managing your trade. All right. So that will be the only other thing I'll acknowledge on the top side, because it is within this gap and it is trying to come up. And that's Home Depot. Okay. So I'm taking it up here, and I should be closing out 385, 386. Getting out there and being just fine with that. Let it reset, and then actually I'm trying to take it up this weekly high, the weekly 10 no stick top right here. So 387. I'm hoping I don't have to pull it early, but we'll see. We'll see how this week goes. All right, so that's Home Depot, keep moving along. Caterpillar, you see my thing spooling already? I don't know what's going on my computer today. Because I'm not even running more than what I normally run, so I don't know what's going on today. Well, right now, I was able to, side note, the first half of the recording is trying to be salvaged. So there's that going on. So pray that we can keep running here, just FYI. All right. So cat is monthly. Cat's at all-time highs. We have nothing back here that we can use. Cat is at an all-time high. So what does that mean? It means we got to get good at Fibonacci once again. So because this is the current candle, we're only worrying about the bottom of the fair value gap close from this monthly perspective, okay? We want to acknowledge that. Monthly. Monthly fair value gap close. All right. And then from there, the small one, trader's choice. Let's get into this weekly and daily and see what we got. So the weekly cat, we have this weekly fair value gap here. I like this one. I also like the rejection from it. So that looks great from the weekly time frame. That looks amazing. So weekly fair value gap open. And then in this case, I am gonna acknowledge the weekly close because the distance is enough for me to want to know the difference. Weekly fair value gap close. And then I'm good there. We broke above and closed above. So let's come down to the daily. And then we have this large, I know y'all see this W that's like right in your face. The fact that it did this middle finger W, I don't like you for that, but you know, fine. We'll note it for the trickery that it is, and we won't get fooled by it again. We'll use it to our advantage. All right. So price was going up. So that just means I need to hold like a lot longer with cat. God, I gotta figure out how long I gotta hold it. That's gonna work on my patience. But this daily, I think, all right, let's take out a few of these fair value gaps from the daily. Let's mark most of these because I don't know how price wants to jump around. Jump, jump, jump around. So, and then it has a physical gap right in here. So we can acknowledge the bottom of this is daily fair value gap close. And I can actually take this as a daily gap open. In this case, I'm gonna acknowledge the gap as a gap and leave the fair value gaps as fair value gaps, which I know can look like a lot, but this is a daily fair value gap open. This is a close. And then the physical gap open. I'll just keep it short and sweet. Gap open, gap close. Gap close. Welcome back, everyone. Sorry again. Love-hate relationship with technology. Nothing I could have did about it. I don't want that line. I want this, and I want it to say daily fair value gap close. All right, there's cat. And then the 2 hour is where we're going to draw the fib. In this case, if I can even see a good fib to draw, we don't have no breakout. Anyway, this will be the high, I guess, wouldn't it? Let's try it. I just discovered it, so let's see what it does this time. This is the low down here. All right, and we're above it, which is like what I like to see. So what was that 344 from current price? $7. $5 ATR is pushing it kind of close, but you never know. Cat did this and that. It was way more, but we'll see how it goes. I'm looking now for the consolidation because of the W. So as much as you draw fibs, you can project where it goes. That's fine. Project where it goes all day, but don't ignore the fact that this is a W and it may consolidate before running up. 1, 2, 3, 4, 5, 6, 7 new price lines. So you may get an 8. You may get one more, at least one more, right? Bullish candle. We can go off of that too. And then if we did that, put the fib back. Wait, let me see. I want to try something right here. There it is. Because I'm like, how do you get that? Because I'm really working on how to get this nice point, but it comes within these small little things. Okay, now I see it. I see it, said the blind man. Okay, so you could take that longer. It's not bad, but you see how it pushes that up? And then if we do these smaller, like that's what I said, this is a up and then a swing down. But it's taking me even an eye level of skill to not go too far out on drawing it, but seeing a true swing high and a swing low. We're going to work on this together, y'all, to try to get that closer, most breakout, to get that next fib to be closer to these breakouts. So if we did it here, but that's a 2-hour, which I like, again, 2-hour, this is cool. Because then when price came back up here, it broke out, and then this was your next projection. And that would have took you alongside with the data. I want beyond the data. So it's nice, but it's not the next. It's all right, I guess. Go ahead, Esther.
So I was just gonna say that what I'm thinking it might possibly do, depending on what we do at the open tomorrow, that
Mhm.
2-hour fair value gap at 335, almost 334. It's the same, almost the same as, there you go. It actually was very concurrent, very close to your Fibonacci line that you
Oh,
just took away.
that's
So yeah, so I have a
very good.
feeling that might be where we retrace to.
Yeah, we can. I mean, it doesn't
Right,
not
334,
line
335,
up.
just a little bit, right? Just a little bit, and just to, again, it's gonna consolidate, like you said. But I do
Right.
think that our next target is gonna be that 338, 337, possibly even in the next level.
Right.
See.
Yeah,
It's
because then
crazy.
in this fib, it brings you all the way up to 340, which is like,
That's high. That's
yeah,
really
I
high.
agree. And so
I can't wrap my head
actually
around that just yet. Yeah, I want more evidence to believe that.
we can look at Apple Dishers.
No, we
I
can't. Yeah.
like this way better. I think I like this way better because it takes like the whole W.
Yeah, I think so
But
too.
then like I know 344 is still up there, but it's really not that bad. It's just like if you again, it's 344. This is just that tricky part, y'all. We're just gonna work through it together on each ticker one by one to find its sweet spot.
Well, you know,
But
there's another Fibonacci level that you can add to the markers where the lines will draw. That's like 0.23 something, something, something. That would give us another line in between here and 1.38. Just to see if that would, in the settings, in the Fibonacci
so you're
settings.
saying
You can,
you're saying add another line,
yeah,
add another
yeah,
value. Okay, so let's check this
exactly.
out. All right, come on.
Because I have too many values on my
You're saying,
Fibonacci.
I get what you're
But
saying. So you're saying add what value? Go ahead.
the one that would be above one, so one, let's see, where is it? 1 million. Can you scroll down further?
Well, I mean, it was
There we go.
whatever one you
No,
want. Well,
yeah, it would be,
if
in
I
other words, it would be
change
one,
mine out,
one, 1.236.
1.2. Yeah, I don't have that.
236.
I don't think I have 1.236. Okay. So 1.236.
Let's see.
That's new.
See?
Okay.
Gives us another line.
Where'd you get this level from? Just
It's
curious.
actually, because if you look it down, look at the beginning of it, look all the way down.
The
236.
236. So you
Yeah.
took the inverse
So
of
just
this one.
one flat,
Okay.
right,
So you added
exactly.
that one.
It's
Okay.
just another Fibonacci, it's
Yeah,
just
it is.
another readout. It
Okay.
might seem trivial, but it does give us another target that seems a little safer
Yeah.
with
It's
this
like,
all-time high bullshit going on,
yeah, I know what you mean. It stutters. You never know when it's gonna stutter. I know.
Well, yeah,
I
but at least it might give us an explanation.
know. That's not bad. You can
Yeah.
add, so whoever wants to add 1.236 can see how it works and test it against it
Yeah.
and see how it
I've
is.
been
'Cause
using
it's
it. I
right in
like it.
between there, and we'll use it across the different other tickers and see how you like it. That's what this group is about. Thank you, Esther. Discover
Yay.
yourself as a trader. All right, let's go to Apple. Let's see what else we got. Cat. Okay, I'll get it. Amazon, Excellent, Apple, and Duolingo. We'll get through there because I want to see Apple too. So let's go to XOXL first, then Amazon. Let's stick to the list. All right. So let's go XOXL. I don't think I cleaned it off from last week because I'm still in it and my lines still work. So I kind of saved myself some work on this one, so I will for you guys. So this other half of the lesson is being recorded too, for the whole top-down analysis, but it's here. As you see, I have monthly, weekly, I have the whole thing already done. Because I'm in this trade. And so I'm in for this juicy fair value gap, this juicy weekly fair value gap. All right, I took it up to 40. It hit 47. I tell you I was coming for 47. What? So happy about that. And then now that we have pushed up in here, I do think we can close this. I do recognize all the areas that I can get potential pushback, like it first coming up to the monthly line, right? First at 52. And so that's probably where I'm going to get out first as it matches that wick. I have some gaps on some smaller time frames, 51. I don't know if it's an actual gap. It could just be me marking a line. Yeah, me marking the top of a pattern. But I marked it here. And then the 2-hour daily. Let me go back to daily. Excuse me. Here we go. Here it is. Daily. This is what I wanted. This line, this area. So I may take profit at 51, depending on how much kickback, because this is a daily peak. Let's zoom out so you guys can see that. This is what we're running into that weekly fair value gap, weekly and monthly. As we come up to the bottom of the monthly, that's what we're running into. So we have to get through this. I do believe we have the power to do so. It's one big, large order block that needs to be dealt with. And in order to deal with it, we got to get to the other side. So it looks very healthy for us to do that, especially with looking at the previous data and how it's been running up. So I feel really good for Excel. I did not get back in on Friday. I didn't want 2 days of data eating up against me. I said, I'll wait till Monday and get back in. All right, so that's SOXL. Any specific questions on SOXL? So we can keep chugging
Yeah,
along.
we
this line.
talked about that like a month ago to get to 47, and I done been in and out of that thing on so many different levels that it's ridiculous. I've been losing and winning, losing and winning, losing and winning. I just don't
This
know.
area definitely was like, it sucked. I would say it sucked, but I knew it was coming there because I'm telling you, the larger time frame is what gave me the conviction. So that's why I was able to do my finesse.
But did you hold it the whole time, or did you come
I
in
did
and
not
out?
hold it the whole time because I had different dates. So I had like March 15th date, and I didn't want to hold it through there because I would have had too much data eating against me. So I got out of March 15 contracts a couple weeks ago and reposition. I keep repositioning as when price stalls, I reposition for better theta and better dates, as we get closer to the date that I have. Because I can't expect, I know it's going to do the move, but I can't always expect the exact timing of it. So
Yeah, but how do you know when it's doing a real pullback versus a
2 hour,
okay?
2 hour is how I know. Because if it doesn't break certain levels on the 2 hour, there's no need to move.
Okay.
So when price was doing all this dumb shit over here, I just watched the 2 hour, and as long as price didn't break this level, I didn't worry about the bottom. I just kept holding calls. Because I tried to do a short-term put in one of these little stupid ass gaps, and it burned me because you see how choppy it is in here. So I ditched it quickly, and then I just went back in for the call, and held the call long and repositioned for April at that point. And here we are. So the 2 hour helps me figure out
So
how I'm
what
gonna
line
peel
was
back.
you waiting for it to break at the bottom before the weekly fair value top?
Yep. If
Yeah,
price didn't,
a couple times on those puts.
yeah, because look at the dates. This is February, 9th, February 12th, February 15th, February 16th, February 17th, but price never fell. for like a while, but it never broke this level. So I had no reason to hold puts for a long time. None. Because it went because of the 2 hour. So that's how I know.
Okay.
All right, perfect question. Great. Thank you, Kim. Let's keep chugging along. Let's go to Amazon. I'm in Amazon too, so let's talk about Amazon. All right. All right, I cleared the Amazon chart for you guys because I felt like most of us will want Amazon. And Amazon is approaching all-time highs. It's getting closer and closer. Dun, 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 dun. It's like a little shark. We know it's going to get there because it wants to break there. We already have tipped above it, this candle body, just a bit. Okay. Let's zoom in really close to the monthly. This monthly candle so far is above it. We really need this monthly candle to close above it because this previous candle does not close above this candle body. We need this candle to either wick up higher or close above it to really be continuing up higher than this. So we'll see what this month wants to do with Amazon as far as retracing the liquidity in these wicks that are true all-time high. So let's see what it looks like before we move on. We'll acknowledge the bottom of the monthly fair value gap. All right. I know this is tedious, but this is the homework that you need. Monthly fair value gap close. But once you do it, you can kind of set it and forget it for a couple weeks. You're just kind of moving lines up and down. Once y'all get the flow, it really doesn't take that much time. All right. And it will come down to, I'm going to acknowledge the all-time high with a line just to acknowledge it. And we'll come to the weekly here and we'll see how that looks. So we got a weekly fair value gap, 167. And then the close of that one is $1 away. So we'll do weekly fair value gap, open. And I know that one's a little close for me, but I know I'm gonna zoom in. So, and this is just Amazon. Just depends. It's trade choice, but in this case, I'm gonna do it again. It's because when my monthly is above my weekly, it's something about it. It's just because I know what's stronger, so that's why it's something I can't really break. On the top side, we're gonna acknowledge the tweezer top on the weekly, and we're gonna call it exactly that. We're gonna call it a weekly tweezer top. So we acknowledge the very top of the tweezer. Okay. Weekly. I keep tweezer top. Okay. All right. And I think we're good there. And then the daily Amazon, the weekly fair value gap opens, aligns perfectly with this larger gap. So we'll just come up closer to current price and acknowledge our gaps, our Globex gaps, our physical gaps here. And I'm going to announce a physical gap opening by this candle here. That was February 22nd. Okay. And then what I'm going to do is I'm going to also acknowledge the fair value gap. Yeah, because tomorrow's candle. So I will acknowledge to this most current daily fair value gap at 176 and the close of it at 174. All right. So daily fair value gap open and the daily close. And the physical gap open. There's gap open. And then gap close. All right. We're getting there. Chugging along. Okay. So now that we have the bottom come all the way back in time on the daily, scroll all the way back until you hit the candles. And now we're looking at to see what we have as far as resistance to the top side here. And in this case, we have a lot of choppy wicks. So the goal where we have the breakout, this long candle, right? The longer, so we have the evening star and the breakout down, and then price chopped and continue down. The wick that is within the long candle is the wick that needs to be surpassed in order for this area to be your, like, this area will be your fair value gap or whatever, like I'm saying, hidden fair value gap. So if we get like a wick up here, then we definitely know we're gonna finish out this weekly tweezer top. I know I moved that line a little bit. Weekly tweezer top high, and then we'll be moving around up there because it's choppy. We know that it'll slowly take out each of these wicks as it continues up there, and then once it peaks over here, we're definitely in the go. So as it goes up, we're looking to see once it hits the 181 level, price level, we want to know if price is going to turn around, come down, continue up. We're looking for that wick, and this is a daily. So we're looking for it. All right. And at 181. So that's right at that wick on the other side. So price can come up there. We know we have a little choppy levels. And the only other way to get more confirmation on how those choppy levels are going to break up our upward run is to come down to the 2 hour and come all the way back again. You have that 181 line marked from the daily, and you come into the 2 hour. And the only other thing you can do is do a similar fashion with some of these candle wicks. In this case, because I have this nice long body, I would acknowledge this body, and then I acknowledge the wick at the day from, because this candlestick from the daily, this line from the daily aligns with the 2 hour wick. I don't need to chart anything else. So I can make kind of like a wick range with this candle from here. And I like that a lot because for me, it lets me know there's liquidity in this wick. The price is going to come through there. And then the next level of liquidity it's going to try to chase is one up to 183, the tweezer top. So I like this on Amazon. I do believe Amazon's coming up. All of this liquidity looks great and healthy for it to come and collect. And then I like the way that Amazon looks on the daily as far as candlestick patterns, as this is a very nice order block or consolidation area that is giving signal to breaking out on a daily. And of course, it's supported by a nice gap, which is also supported by, weekly and monthly levels. So I'm feeling pretty good about Amazon making it to 183, and I will hold until it most likely gets there. I'll see. Let me bring this one down. I'll do another alert at 180 just to check on it and ensure that it is still moving in my favor and not doing no dumb stuff. Because if it is doing too much of a pullback, I will reposition my contract as I wait for it to come up. All right. Amazon and Duolingo and then Apple. All right. Duolingo and Apple. All right. Duolingo. So Duolingo is another one fairly new to the stock market. The NASDAQ, I would say specifically. So we don't have a lot of data here. So what we're going to do is we'll acknowledge what's here. The same thing. We don't want to change up anything. Monthly fair value gap close. It's tiny, but it's there. Yep, this is a current candle. So we're just going to mark that as the close. We know that's how far price will come down to. Right? Same thing. And that's at the 226 level. Okay. And then from here, we'll come straight to the weekly. And we'll look at this nice breakout, that candle, that signal that it's trying to do. And we just needed to confirm a little higher, and it's going to be on its way. But this is usually the breakout signal. Of course, we wanted to close a little higher. So we want to be cautious here and see how far it pulls back down on the weekly. We are definitely going to acknowledge this full weekly fair value gap, even though there's all this wick and stuff in it, we're acknowledging this level because it's the most recent that price pulled and dip deeper into, and it'll show nicely on the daily too when price is really coming down. So we will, if the price really chooses to come down, I'll say, put that if in there. So I'm going to acknowledge it because it's huge, and we'll see how price maybe continues to bounce off of it. I'm not really sure. Weekly. This is a close. Close. Okay, and this was the open. All right. So now we come down to the daily. All right. And we see we have the nice big gap close off by that. Our monthly and our weekly fair value gap lines are pretty solid with this large gap here that Duolingo did on the daily. And so from here, these two candles give us any type of nothing on which way price may be going to even guess, but we could suspect price will go up after a breakout like this from the weekly perspective, this type of candle pattern, right? You guys, if you look back, these are all support. So we would expect that. From the daily, don't look like it, and the daily make you think that you could potentially try to put down. Be mindful of, if you try to pull back, of all of these little wick areas right here that are going to come down, and this gap is too big to not stop you with these. And then you have a gap on gap situation. Definitely not. That always comes up to be some type of trouble. And I don't think it's going to come down here like talking about it until you get a good signal up here that it's going to do that. So I say wait. I don't know, but you know, this is Cynthia who sent us this one. Yeah, so she likes to swing. So so we can, you know, just Cynthia, however much time you need, boo boo, like take it to the moon. Because from the 2-hour perspective, it's doing a potential flag, which you don't know which way the flag wants to break out. Again, I believe it will want to go up to the top. A lot about the market right now wants to go up to the top. So I bought it at 64. Man, stop bragging. Stop bragging. Okay. Just anyone come here. I bought Duolingo at $64 and now it's $230. Yeah, okay. Got it. We got nice move. Nice. That's a hell of a day up. That's nice. All right. Perfect. All right. Apple, here we go. Dietrich, you know how I feel about Apple lately. I just want to kick it in the teeth. All right. But here we are with Apple. Let's do this. Let's see if I can get back in good graces with Apple this month, because towards February, I just said F you. So monthly fair value gap here. Let's do the top down. Let's get it done on Apple. See if I can get back in good graces. So monthly fair value gap open and monthly close. We struck through it. So how are you going to come to this lower one? So in this case, because Apple looked crazy, Apple looked crazy. So I'm gonna acknowledge this lower monthly fair value gap because Apple. Oh, I don't have any faith in Apple right now. I don't have a lot. So I'm going to acknowledge all these monthly areas. I'll come back and label them for demonstration purposes. I'll keep moving because I know we're getting late here, and I want to talk a little bit about futures. All right, so I got my monthlies, open and close, open and close. So now I'm looking at the weekly. In the weekly, we have this fair value gap that's already been like wicked all the way through. I would say stricken through. I don't know what word I'm trying to say. All right, and then I don't see a lot at the top that looks great. We have this weekly small one. Then you have this large one way up here. And that just makes things confusing. I don't like this chart. But I'm gonna keep pushing. I'm gonna find something. It's gonna click. So I'm gonna see something at some point. So weeklies, fair value gaps. Okay. There's a weekly fair value gap here. I'm gonna label the weeklies against the monthlies. So I'll take the time to do that so I won't confuse you guys as we get into all these lines. So this is gonna be the weekly. So in this case, if it doesn't have a label, it's a monthly. Okay, weekly fair value gap close. C, Randy, not V. And then that one's in between my monthly. And then we even have this weekly close because it already pushed through there. I want to acknowledge that as a weekly close. Weekly fair value gap close. It's another close. My openings are between my monthly, so I'm gonna leave that alone. So I already see this chart about to get like what? All right, and then let's see. Okay, weekly fair value gap, open and close. I'm gonna leave this like this. Let's go to the daily from here and see what we got. Okay, so daily, we have the rejection from the weekly close, but not down to the monthly, which would close the daily. So the monthly will close the daily fair value gap. Great, yay. So we can actually, let's label that monthly / daily. Monthly / daily. I'm just put support because it's just like I see where it's coming from. I can't spell right now, y'all. Whoop. All right. Leave it. Whatever. So I think Apple is going nowhere fast at the moment. And I don't want to play puts because of how it's chopping so much and how just from here, I ain't got a chart anymore. These two levels, I need to really see it push down, and it's not really trying to come down here, but it's not really trying to go back up either. Like these candlestick patterns look like trash. And then when I come to the 2 hour, it's still not drawing a nice, like it's drawing like swoop ups and then come back down type of thing. Like this weird melting down position, which I think it may want to actually touch this monthly daily level. And then maybe we get it come back. I just keep saying, and then, because I keep focusing on these two fair value gaps. I'm trying to figure out how it wants to bounce around it, draw up from it, recover from it, or something. But right now, I'm kind of just leaving Apple alone because I don't have any good run for it. And I know this level of support that it's at is strong. So if anything, if you were thinking of buy shares, great. Like I would do that. But as far as options go, I would just wait a little bit so we won't be wasting money on theta that we don't want to burn. That's just my 2 cents on Apple based on doing this chart. Any questions specifically on it, teachers?
No, that was it. Actually, I was thinking about waiting until it dropped more and then doing a call when I saw signs of turning around.
I agree with you. It sounds like a great plan. It looks so bad right now. Yep. All right, you guys. So to wrap up tonight's call, we will peep at the futures and how it's running up. This is my previous charting from last week on it, but it hasn't really moved. I did it Friday right after the market closed. So it's the same that we just did together. And so we see that the ES is currently bouncing off this Fibonacci level perfectly, beautifully done, right? And we will most likely retrace. I'm on the 2 hour right now. So I'll zoom in closer. And we know that price will come down to this to potentially close this 2 hour potentially. If it's gonna potentially, I don't know how 2 hours can go. This is not kids left in it, they put a body in it. So what do you guys think it's gonna do? It could still come down. It's not much room from current price here, $10, $11. It's a nice scalp. So that one will most likely get taken care of. But the one below it, I wouldn't hold my breath too much. You have quite a bit of a space between here. So I wouldn't be too anxious as to trying to get this lower one. This lower fair value gap is also in alignment with the Fibonacci level and the previous all-time high. So price will probably bounce here and stay up. I'm expecting it to stay up, but I am also expecting this slight pullback. All right. As we break through this Fibonacci, will be coming up to the next one, 5163, and slowly making up 5187. And then I really do think we could potentially have the potential this week to make it up to 52-ish, really close up to that area, especially based on how I previously drew the Fib. If I go back and just for a reminder how I drew it before, because again, there is multiple ways. It's not like no way doesn't work. You just have to find what you think is best. So I'm giving you guys a little bit of options here to help your foundation. But if you draw it from the extreme swing low to swing high and not the shorter one, you get that 52 target up there. And it's not like it's out of reach. And so again, it is about $50 on ES. We know that can happen by the end of this week. So be prepared for that. This is a nice cradle, y'all. I am looking to hold the upward side of this. I'm in SPY as well for the same particular move. So that's what I see. Any last comments, questions before I let you guys go tonight? I know it was a late, long night, but
Yeah, we haven't talked about spreads in a while. I was just wondering,
talk about what?
spreads, like um different types of spreads we used to talk about.
So I don't not do them. I got back into them almost like a couple weeks ago. I think I shared a screenshot of them. I don't do them as often as I used to do them. The market needs to I need a good stall day. So as we get on the calls and there's days that like we got really good doji days that I feel like it's a doji day, or like a day when like we don't know if just certain news days where the market's really pausing. Those are the best times to play verticals.
Okay.
I've been doing a lot more like scalping and positioning myself for the longer term swing than I have been doing the shorter term vertical, because they're fun, but we all know how the 0 DTE one go, because I like to sell them. Tanda was a queen on doing the debit spread ones, and that's not something you can't do. Debit spreads to me are just as easy as swinging the contract naked. And like a naked like buy position, obviously not a naked short position, but I think it's similar. You'll be going for like if it was SPY, for instance, you will want strikes between like 5, I mean, if not already in the money, 5 to 11, 5-12. So as price comes up, you're further in it. And then that's how you make your profit off the debit spread. Of course, just a reminder, your credit spreads, you want to stay out of the way of price action coming toward whatever strikes you pick. So in this case, if we were playing credit spreads and we think price will come up, we'll be doing put credit spreads, expecting price to stay up above us, out of our way, and not come back down towards us. And so that's the way we can sell those. I do them. I've done them. I mean, they're working out, especially with all these fair value gaps and order blocks and my candlesticks. They're easier to do. I just, the risk to reward is just not as great. And the iron butterflies are a lot of contracts at one time. So you just have to have the capital to do a butterfly and then an iron butterfly, because if I'm not mistaken, it's like 6 to 8 contracts. All right, y'all. Anything else? Are you guys good? Good, great. Y'all have a fantastic night. I will see all of you all Tuesday morning for my live day trading crew. Y'all take care. Have a good one. Peace out. Ciao.